Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. Ethereum's Spectra upgrade approaches, but analysts warn of lukewarm market sentiment. BNB chain surpasses 500 million active addresses amid TST surge and MEV concerns. South Korea urged to approve crypto ETFs to stay competitive, says KRX chairman. Japan's FSA considers classifying crypto as securities to enable ETF approval. Litecoin surges over 7% amid growing optimism for spot LTC ETF approval. Ethereum's Spectra upgrade approaches, but analysts warn of lukewarm market sentiment. Despite a significant $500 million inflow into spot Ethereum ETFs, the price of ETH remains stagnant, reflecting cautious market sentiment as investors await the upcoming Spectra upgrade. Ethereum struggles despite ETF inflows. Ethereum, the second-largest cryptocurrency by market capitalization, has yet to see meaningful price movement despite continued institutional investment. According to analysts at Matrixport, demand from long-term investors is rising, particularly among members of World Financial Liberty, WFL, a decentralized finance group with ties to President Donald Trump. WFL has been accumulating ETH to establish a strategic reserve of altcoins, though the exact purpose of this reserve remains unclear. Even with Ethereum ETF inflows and WFL's growing interest in ETH, market sentiment remains subdued. Ethereum's Spectra upgrade, a potential catalyst. Ethereum's much-anticipated Spectra upgrade is scheduled for rollout on the Wholesky and Sepolia testnets in February and March, with full mainnet deployment expected in April 2025. Historically, Ethereum upgrades have driven strong price action, but analysts are skeptical about Spectra's ability to trigger a significant rally. Unlike previous network improvements, expectations for this update remain muted, as broader macroeconomic factors continue to weigh on the crypto market. Altcoins face market pressure as fear grows. The downturn is not limited to Ethereum. Several major altcoins, including Dogecoin, Doge, XRP, and Solana, SOL, have also faced downward pressure in recent weeks. As reported by Crypto.news, the Fear and Greed Index recently dropped to 35, its lowest level since October 2024, indicating heightened investor anxiety. Historically, increased fear in the market has led to further price declines. Additionally, the altcoin season index has fallen to 33, down from 47 at the beginning of the year. This shift suggests that investor interest in altcoins is waning, with many opting to allocate funds to Bitcoin, BTC, instead. Bitcoin maintains stability as altcoins struggle. While the altcoin market faces headwinds, Bitcoin has remained relatively stable, reinforcing its status as the preferred asset among crypto investors. Spot Bitcoin ETFs, which recently celebrated their one-year anniversary, saw mixed inflows last week, reflecting market uncertainty following Trump's announcement of new trade tariffs on China, Mexico, and Canada. Despite these concerns, Bitcoin has managed to hold steady, trading at $97,150 as of the latest market update, up 4.6% over the past week. Conclusion: Ethereum's next move remains uncertain. With Ethereum's Spectra upgrade on the horizon, investors remain cautious about its potential impact on price action. Although institutional interest continues to grow, broader market sentiment remains fragile, especially as altcoins struggle to maintain momentum. Whether ETH can break out of its current stagnation will likely depend on how the market reacts to the upgrade and whether macroeconomic conditions improve in the coming months. BNB chain surpasses 500 million active addresses amid TST surge and MEV concerns. BNB chain has officially crossed 500 million unique active addresses, a major milestone fueled by the growing attention around the TST meme coin. According to Whale Insider, this achievement coincided with the release of TST, a test token introduced by the BNB chain team for an educational tutorial on creating meme coins via the for.meme launchpad. Unexpected market frenzy around TST. Initially designed as an instructional tool, TST unexpectedly gained significant traction, experiencing an 1,100% increase within its first 3 days. The token reached an all-time high of 52 cents before retracting to 20 cents, marking a 62% decline, per CoinMarketCap data. The rally in TST's price originated from its brief mention in a tutorial video, where its name appeared in a single frame. After the discovery, the video was temporarily removed, but Binance co-founder Changpeng CZ Zhao later instructed the team to restore it. In an X, formerly Twitter, post, CZ clarified that TST was not an official Binance token and had no formal ties to the BNB chain beyond its role as a demonstration. Despite its educational purpose, speculation around TST likely contributed to the surge in active addresses on BNB chain. BNB chain faces mounting MEV challenges. As BNB chain continues to attract more users, concerns regarding maximal extractable value, MEV, exploitation have grown. MEV refers to the additional profits that blockchain validators extract by altering the order of transactions, typically through front-running and sandwich attacks. These practices allow automated bots to capitalize on network inefficiencies, often at the expense of retail traders. Among these tactics, sandwich attacks have emerged as a particular issue on the BNB chain, resulting in significant financial losses for users. In 2024 alone, traders on the network reportedly lost around $1.5 billion due to these exploitative practices. Binance responds to MEV concerns. Recognizing the impact of MEV, Binance founder CZ has addressed the issue on X by launching a community poll, asking whether BNB chain should take aggressive measures to curb MEV-related risks. With BNB chain surpassing 500 million active addresses, it remains one of the most widely adopted blockchain networks. However, mitigating MEV risks will be critical in ensuring long-term user trust and sustainable growth. South Korea urged to approve crypto ETFs to stay competitive, says KRX chairman. South Korea must embrace cryptocurrency exchange-traded funds, ETFs, to maintain its competitive edge in global finance, according to Jung Eunbo, chairman of the Korea Exchange, KRX. In a recent interview in Seoul, Jung emphasized that South Korea ranks as the third-largest real cryptocurrency trading market globally, and delaying the introduction of crypto ETFs could leave the country lagging behind as other financial hubs move forward. US leads the way in crypto ETFs. Jung pointed to the United States, where both spot and futures-based Bitcoin ETFs are widely available and actively traded. He stressed that launching crypto ETFs in South Korea could unlock new investment opportunities and drive financial sector innovation. Cryptocurrencies represent a transformative sector capable of adding new value to the financial industry. We must not postpone the introduction of cryptocurrency ETFs, Jung stated. As of February 2025, the U.S. market hosts 20 cryptocurrency exchange-traded products, including 12 spot Bitcoin ETFs, 8 Bitcoin strategy ETFs, 9 spot Ethereum ETFs. Beyond Bitcoin and Ethereum, asset managers are actively filing for ETFs based on other cryptocurrencies, including Solana, SOL, XRP, and even meme coins like Dogecoin, Doge. Challenges facing South Korea's financial sector. Jung's call for crypto ETF approval comes at a time when South Korea's financial sector faces mounting challenges. These include a shrinking retail investor base and the growing presence of so-called zombie companies, businesses surviving on excessive borrowing. He believes cryptocurrency ETFs could provide investors with a regulated and safer way to access digital assets, aligning with his broader goal of modernizing South Korea's financial landscape. Jung also warned that overregulation could stifle innovation in the market. He further advocated for easing restrictions on pension fund investments in equities, arguing that excessive risk limitations could negatively impact long-term returns. Regulatory developments on crypto ETFs in South Korea. South Korean regulators have been deliberating crypto ETFs for months. In October 2024, local media reported that authorities were considering approval, but no timeline was provided. Earlier in 2024, Financial Supervisory Service, FSS, Governor Lee Bok-hyun hinted at ongoing discussions regarding spot Bitcoin ETFs, indicating that regulatory clarity could emerge soon. Jung's comments also follow South Korea's stock market turbulence after President Yoon Suk-yeol's failed attempt to impose martial law, which led to an exodus of investors. Speaking at the Securities and Derivatives Market Opening Ceremony 2025, Jung emphasized the need for new financial products to reinvigorate market confidence. As global interest in crypto ETFs grows, South Korea's decision on approving digital asset funds could determine its position in the evolving financial landscape. Japan's FSA considers classifying crypto as securities to enable ETF approval. Japan's Financial Services Agency, FSA, is reportedly considering classifying cryptocurrencies as securities, a move that could pave the way for the approval of spot crypto exchange-traded funds, ETFs, in the country. According to a report from Yahoo Japan, citing local news sources, the FSA has initiated closed-door discussions with financial experts to review potential regulatory changes. Potential policy shifts and timeline. The FSA is expected to announce a policy direction by June 2025 before seeking feedback from the Financial System Council, which is scheduled to convene in fall 2025. If the agency decides to proceed, a legal amendment could be introduced in 2026. However, the exact timeline remains uncertain. If cryptocurrencies are formally categorized as securities, it may introduce additional regulatory hurdles for retail investors. On the other hand, such a move could also enable the introduction of crypto ETFs, opening new investment opportunities in Japan's financial markets. Debate over regulatory frameworks. The FSA is currently evaluating whether to apply existing securities laws under the Financial Instruments and Exchange Act, FIEA. Develop a new regulatory framework under the Payment Services Act. Limit securities classification to major cryptocurrencies like Bitcoin, BTC, and Ethereum, ETH, while exempting smaller altcoins. Japan's push for crypto ETF approval. In October 2024, a domestic study group released a report recommending Japan prioritize the approval of Bitcoin and Ethereum ETFs. The report also called for a clear regulatory framework for digital assets, distinct tax policies for crypto ETFs versus spot transactions. The regulatory discussions come as Japan seeks to attract institutional investment in digital assets. SoftBank's crypto involvement and market implications. Japan's growing interest in crypto-friendly regulations has caught the attention of major investors like SoftBank, which recently backed Cipher Mining, a US-based Bitcoin mining data center. As part of its investment deal, SoftBank secured an option to acquire a 300 megawatts undeveloped data center in Texas, further solidifying its position in the blockchain sector. Japan's financial landscape and SoftBank's growth. The timing of Japan's regulatory review coincides with SoftBank's latest earnings report, which showed steady financial growth across all business segments. For the 9-month period ending December 2024, SoftBank's net income rose 7.4% to 436.6 billion yen, $3.1 billion, up from 406.7 billion yen the previous year. What's next? The possibility of Japan approving spot crypto ETFs could make it one of the first major Asian economies to offer regulated cryptocurrency investment products. If the FSA moves forward with classifying cryptocurrencies as securities, Japan's financial markets could see increased adoption of Bitcoin and Ethereum ETFs, attracting both domestic and international investors. Litecoin surges over 7% amid growing optimism for spot LTC ETF approval. Litecoin, LTC, has experienced a sharp price increase, breaking out of its consolidation phase as market confidence in the approval of a spot Litecoin ETF continues to strengthen. On February 10, LTC surged by over 10%, reaching an intraday high of $114.33. The cryptocurrency has now risen by 104% from its lowest point in 2024. At the time of writing, Litecoin's market capitalization stands at $8.5 billion, while its daily trading volume has doubled, surpassing $1 billion. Why is Litecoin pumping? ETF approval odds increase. The primary driver behind Litecoin's rally is growing anticipation that the U.S. Securities and Exchange Commission, SEC, may approve a spot Litecoin ETF in 2025. According to Polymarket data, the probability of SEC approval has climbed to 81%, with most traders betting that an LTC ETF will launch this year. While several other cryptocurrencies, including Solana, SOL, and Hedera, HBAR, are also in the pipeline for ETF consideration, analysts suggest that the SEC may be more inclined to approve a Litecoin ETF due to its structural similarities to Bitcoin, BTC. Litecoin's edge, a Bitcoin hard fork and digital commodity status. Litecoin operates as a proof-of-work (POW) network, much like Bitcoin, making it more likely to be classified as a digital commodity rather than a security. Notably, Bloomberg analyst Eric Balchuners has previously speculated that Litecoin could be next in line for a spot ETF approval, citing industry chatter and regulatory sentiment. Given that Bitcoin already has multiple approved spot ETFs, some analysts argue there is no strong reason for the SEC to deny a Litecoin ETF. On-chain metrics indicate strong LTC momentum. Litecoin's bullish breakout is also supported by strong on-chain fundamentals. Open interest in futures trading. CoinGlass data reveals that LTC open interest has surged 10.8% in the past 24 hours, reaching $549 million. This suggests that traders expect further price appreciation. Increased accumulation. Sentiment data shows that the number of LTC holders has steadily increased over the past week. Whale activity. Large Litecoin holders, holding between 10,000 and 100,000 LTC, have been accumulating more coins over the past 10 days. Technical indicators confirm bullish sentiment. On the daily LTC USDT price chart, several key technical indicators suggest that Litecoin may be entering a bullish phase. MACD signal. The MACD line is on the verge of crossing above the signal line, a classic bullish reversal indicator. RSI strength. The Relative Strength Index, RSI, has climbed to 54, surpassing the neutral 50 level. If the RSI continues rising towards 60 to 70, it could confirm a stronger uptrend. Chaikin money flow, CMF. A positive CMF reading suggests strong buying pressure, indicating that new capital is flowing into Litecoin. Analysts set price target at $128 for LTC. Prominent crypto analyst Carl Moon recently shared a Litecoin price prediction on X, formerly Twitter, highlighting a bullish ascending triangle breakout. According to his analysis, Litecoin has broken out of its consolidation range, and the measured move from the pattern suggests an LTC price target of $128. At press time, Litecoin, LTC, is trading at $117.05, maintaining its upward trajectory as speculation around ETF approval and market fundamentals continue to fuel demand.